All right, what's up, guys? Welcome. We're back. Victor's here. I'm here, and the markets are open, which means we got all eyes on the Forex market. How are you guys doing? And how are you, Victor?
I'm doing fine. I'm doing great. How about everyone else watching our stream today? I hope you are ready because this week is going to be a great week, I think, with the Bank of Canada bringing their rate decision. I know it's not the Fed, but it may give us a little glimpse into how central bank policymakers are thinking about the world economy, about North America. So it may give some kind of hint what we can expect from the Fed, because of course they collaborate, they talk to each other. So I think that's very interesting, and we all know how the interest rate is so impactful on the market, on the Forex market, right?
Yep.
So it's I think it's a great week to be a trader.
And when is that coming up? It's coming up today, but at what time?
That is let me check the exact that's actually tomorrow. I said this
Oh,
week, so
sorry,
it's
it's
it's yes,
tomorrow. Yeah.
no problem. It's tomorrow, Bank of. But of course, you can see the whole week how the investors, the traders, are positioning themselves strategically for an event like this, right? Do they want to, pull back some of their bets, or do they want to be aggressively exposed to the market because of the opportunities it promised to bring to the market?
Yeah, no, it's gonna be exciting week. I think again we talked about this yesterday as well. It's been quite a slow week. It's been quite a slow week. Not a lot of setups for me. In today's session though, I want to talk about. I'm gonna talk a little bit about trend following, trend trading and trend following, and I'm gonna show you how. A way that I do trend following and trend trading with the EMAs. So definitely stay tuned to that. We're going to do that a bit later in the live stream. But now, before we continue, I got something I want to show you guys. Let me just see if this works. I don't know if you guys are in the Discord server, but if you are in the Discord server, then you know that we've just put out an announcement for the Bootcamp Trading Week, and the registrations for that Bootcamp Trading Week is open right now. So all you have to do is you can go to the description of this video, click that one to sign up, and I'm going to talk a little bit about during this live stream what this Bootcamp Trading Week is all about. You can also go to btw.the5ers.com and sign up there, and you will be automatically entered into the Bootcamp Trading Week, which is a full week of content on the from different traders. We're going to have 8 different expert traders giving you their insights and expert analysis on how they're trading and share a bit about their systems. And the goal here is to set you guys up for success, okay? Because at the end of this week, we're going to give you assignments, okay? So it's going to be awesome. We're going to have every day of the week, we're going to have sessions. And based on these sessions, you will get assignments. And you're going to go through these assignments. You're going to, upload the assignments. And then after you've done all the assignments, you'll be able to get a 20K bootcamp evaluation account for only $10. All right. So only $10, you'll get a bootcamp account. And the reason why we're doing this is because, like I said, we're setting you guys up for success. We're going to give you the knowledge, the educational knowledge that you need, that we think you need to succeed. And then we're giving you a very cheap option to get a bootcamp evaluation account. And with that bootcamp evaluation account, we want to see that you're taking this knowledge and putting it to work and get funded. We all want you guys to get funded. Every single one of you watching, we want to get you funded, guys. That's our whole business idea, to give you guys funding. And I think this is a beautiful, beautiful opportunity of that mission. So yeah, go to the link in the description below and make sure that you're signing up. Oh, look at that, we got Alex. Whoa!
Alex is in the house.
Oh, wait a minute. We got Alex. You know what needs to be done. Done.
Oh, are we doing it?
Yeah. All right, let's put that on loop, and then we'll just forever That's forever 2 hours of this sound. Okay.
Wait, where's the whole intro? Bang! We don't use these anymore. These little things. Maybe we should do more new ones.
Yeah, we should do new ones. Should do new ones.
Jonatan, you were talking about the other things that the 5ers is doing, right? The event, the educational value. I think there is a wise word, an ancient saying. It says, "You recognize the tree by the fruits it gives," right? And here you can, you know, the industry has different prop firms, right? The 5ers is not the only one, but by the fruits, right? The things the 5ers does, you can how, you know, what is it about, right? Our business model is based on the fact on the fact, right? We want you to succeed as a trader. And that's how you know you are with a legit prop firm. We do everything we can to make sure that you have the tools, the knowledge, the skills, because when you succeed, we succeed. And that's I think the best, but only the way a prop firm should be. It should be based, we should have our interest aligned with the trader. And that's what you see with the 5. And then that's why we have these events that are focused, and that's why we have a Discord server focused on the growth, the community, education, to help you, support you as the trader, because that's where our success is. It's where your success also is. That's where we will be successful.
Yep, great. Definitely. You said it very, very beautifully. It's our success. Your success is our success. And that's the whole idea of having a prop firm. Okay, so today I'm going to show you a video.
Oh.
But I'm waiting for that video to get sent to me. When I have that video, I'll show you the video. But before that, I want to talk about trend trading, trend following. And there's a couple of ways we can follow a trend. So first of all, what is a trend? We have to define what a trend is and what trend following actually is, right? And
before we continue, can I just get into the comments how you define what an uptrend is? Because this is a question that I ask people all the time, and it just helps us assess where you guys are at. If you understand how to define what a trend actually is in simplest of ways.
Yeah, so a trend is basically a type of structure in the market. So when we talk about technical analysis, we talk a lot about market structure. So when we talk about market structure, there's different types of structures in the market, and a trend is one of those structures. You can either have a downtrend or an uptrend, and your idea is to follow that trend, right? And basically, as a technical analyst, our job is to, and this is if you look at the definition of what a technical analyst is, according to CMT, you talk about how our job is to identify the trend. And I would actually argue that it's not about identifying the trend, it's about identifying the structure. But they say it's about identifying a trend, and then we want to ask ourselves, how can we participate in this trend while also managing our risk accordingly? And how can we, enter the trend and stay in the trend for as long as possible while managing our risk accordingly? And there's many, many different ways of getting an entry and getting into a trend. And I think today I want to talk about some of the ways that I enter a trend. You can either have, for me, trend trading is about two different things. Either you want to enter at the beginning of a new trend, or you want to enter within a current trend. And you can also, I think when it comes to entering a new trend, there's not a lot of different ways to do it. But when you enter a current trade, in a current trend, you have basically, you can enter at support in an uptrend, or you can also enter on an uptrend. So when we talk about entering current trends, there's a lot of variations in the way you can be trading, and you have many different systems in that. But when it comes to catching a new trend forming, I would argue that there's really only a handful of ways you can actually trade that, because either you wait for a downtrend to just hit support and then you expect that support to be the bottom of that downtrend for an uptrend to start, or you wait for a reversal pattern to happen at that level. And I think those are the two main points of trying to catch a new trend forming. So I want to maybe, I know Victor is listening to me now, and he probably has a lot of different things he wants to comment on that, if I'm not mistaken.
I think we all both do.
Yeah,
Yeah,
well,
go ahead. What's
well,
your
I
thoughts
think
on that?
the basic thing is, of course, well, you have different ways to define a trend, right? In simple terms, the trend is where the market is likely to continue, is going, has a easier way, has least resistance to move to, right? That's the direction. And you can see it, you can define it through market structure, which I think is the basis and should be the basis for everyone to look at trend. But you can also define trend with EMAs, or moving averages in general, because they will also have certain characteristics that are very specific when a market is trending, right? They will have a direction, and when it's sideways, they will be going horizontal. And if you have multiple EMAs as well, or moving averages in general, they will also have a certain way, right? The faster one will be higher than the slower one, things like that. But the structural, I personally like the market structure to that definition of a trend much better, because it's to me it's easy, and I think it's easy for everyone, but it's very simple, and there's a power in simplicity, right? If you're
Yeah.
making higher highs and higher lows, then there's no other way you are in an uptrend. That's so fundamental. Once you get that, you already have a big portion of your setup is already, for a big portion, is already resolved. You got your direction. You know which direction it is likely to continue, which one it's going to extend. If you have a TP, right, the TPs in the direction of the trend can be extended more easily than the ones that are against the trend, right? You need to be aware of that to adjust your TP, and also stop loss, less so, but especially TP, I would say. So I think, yeah, that's for the trend. Um, but they are, as someone said, order flow, and I think that's also very important. And you can define order flow differently, and maybe I can talk a little bit how you can use that as well in your trend assessment.
Mm-hmm. I'd just like to add my 2 cents as well, just because I this is how I love to trade, is market structure and following trends. But you could have trends within trends as well. So intraday trends are a thing, and I trade a lot. Pullbacks are, like if you've got a macro trend, those pullbacks are intraday trends that can be traded. And when I'm day trading, those tends to be the easier setups for me, because those reactions are very clear and they're very, very fast. So if you've got an overall downtrend, for instance, and you're coming to a area of support, you can look for something like a double bottom head and shoulders pattern, then a break and retest continuation, which would be your start into that trade. Now, understanding just basic market structure will show you, obviously, you're not going to hold on to that trade as much as you would if you were going to hold on to the trade if you were into the macro trend, but you can still add to that trade on the higher lows that intraday trend gives you, if you know what I'm talking about. So it's a really, really fantastic subject, because this is the stuff that honestly I feel like is the basics and the foundations that a lot of people actually miss. And you get that right, you can find trends, you can find trades in so many different markets by just using the market structure. Obviously, you've got to be careful with ranges, because soon as you have a range starting, it may look like it's a trend, and if you're trading it like a trend and then it starts ranging, you're going to eat up your account. So there are some nuances into how to identify when you're going to get in a range bound environment, or if you're in an intraday trend or an overall macro trend, and that's what Jonathan, I think, will go over.
Yeah, absolutely. And I 100% agree with you guys. And I'm going to show you guys a very simple way, or at least what I think is a very simple way of identifying the trend and then getting into an early trend and then trying to build a system around that. Before we jump into that, I want to give you guys this right here, our announcement of the trading bootcamp week coming up. All right. Are you ready to refine your trading skills? If you are, then watch until the end of this video because we have a special promotion for you. Welcome to the 5ers Bootcamp Trading Week, a mastery series designed to equip you with the right tools and knowledge that you need to become a more confident and profitable trader. You will get to join 8 expert mentors and traders for daily lessons that dive deep into key trading aspects. Every day, we are hosting 2 lessons on different trading topics and active assignments to sharpen your trading skills. And we have a special promotion for those of you who complete all the assignments. A $20K bootcamp account for only $10. So are you ready to raise the bar in your trading? Join us and sign up for free now.
Guys, can we just get a round of applause for that fantastic promotion? There you go. Do you know how long it takes me? I don't know how many takes, but it takes me take after take after take. And there's a lot of bleeps.
Well, who said I don't do many takes though?
I don't know. It just looks like you're just like one taker. You just look like a one.
Yeah, well, that was quite simple though. But yeah, it's well, you know, I'm working with a great team, you know. Gonna hand it to the team. It's a great team. Getting all the support needed to create quality stuff like that. And the things we got coming up for you guys is like I would love to just tell you guys what we have coming up, what we're working on, but I'm not allowed to classified information. But yeah, we got some huge things coming up. It's the future of the 5ers and the future of this industry is just absolutely booming right now. I'm really looking forward to the future of this. Okay, trend following and trend trading. Okay, so we covered a few topics, and I think one of the main things I want to talk about is you know, market structure. And I think what we have to do is we have to think about, you know, the concept of lower lows and lower highs and higher lows and higher highs. I think that is the main concept of a trend, and that obviously looks like this. Now, most of you watching, you all know about this, right? You all know about this. A downtrend. This is a downtrend because it has lower highs and lower lows. That's not really complicated. Most people that are even new into technical analysis, you know, knows this structure. But what's difficult is how do you identify a reversal and a new trend before it's obvious, because that's when you make the money, right? That's when you get into a good position. So one thing I like to do is I like to look at the behavior of the trend, and all trends might look a bit different. You know, in reality, you're not going to have that picture perfect trend. You might have something that looks like this, you know, but you're still going to have an overall downtrend. So you might have something that looks like this. So here we have the behavior of the trend, right? This is the behavior of the trend. You have, before creating a new low, you have a double bottom, right? So you have double bottoms before creating a new low. So what happens when you first go below this low? Now this is a change of behavior. This has not happened, you know, when you go below that low, that has not happened since the beginning of this trend. And when you have a change of behavior like that, that's your time that you should be paying attention. And what if you then have something like this? Now, this is a complete change of behavior. And this, in my opinion, is the beginning of something potentially big happening. Because what you have in a trend is you have a primary trend and then secondary trends. So this right here is the primary trend, Okay, that's the downtrend. That's the overall downtrend. But within this primary downtrend, you'll have uptrends because of the fact that the market is fractal. So this is, let's say this is on the daily. And if you zoom in on the 15-minute, you will probably have uptrends and downtrends and ranges within this secondary move right here. So let's say that we have the secondary trend is showing clear signs of an actual uptrend. And this is when you start looking at a potential shift of structure. If you look at the bigger picture, this is still a downtrend. So this might be viewed as, you know, an entry against the overall primary trend, but it's a shift in the secondary trend. So that's one way that you can start identifying clues of a trend shifting, is to identify the secondary trends and looking at the change of behavior in the secondary trend. Now, this is a bit more advanced, but if we go to just this original trend that we had right here, the most obvious way to identify a structure shift is just look at the sequence of lower lows and lower highs. So let's say, for example, this low right here, we have an equal low, and then you have something like this. This is a picture perfect example of a bottom formation and a potential reversal pattern. It's confirmed when you either break above this level right here or when you retest that breakout level. This, in my opinion, is one of the cleanest way of identifying a new trend forming. So I want to look at a couple of examples of this. And I want you guys to, if you want to follow along here, you should open Euro NCD, because Euro NCD is the Forex pair in all markets that has the most cleanest price action. The highs and the lows and the trends and the ranges and the break and retest is just absolutely perfect on Euro.
I took a trade on that yesterday with the exact thing that you're talking about now. So afterwards we can go back and talk about that as well. Yeah,
definitely. Let's do that. Now, let's go to first a daily market. Okay, so this is a good example where you have, now what you have to do first, you have to look at the primary trend, or at least that's what I do. You look at the primary trend and then you try to identify the overall swing points. So we have a swing point is basically an area where price comes into an area or level and then has a reversal at that level. So you come down and then it swings out of that level, almost like you have imagine you have a bouncing ball and you're throwing that ball into the floor, and then it bounces up to the ceiling or whatever. So imagine that you have an invisible floor here that price is bouncing on. And we can say that we have an overall swing low here, a swing high, low, and then a high, and it kind of continues like this. I would say that is the primary trend. Now, the beautiful thing with technical analysis and price action is the fractal nature of price action. I want you guys to remember that. So a fractal, if we're talking about, you know, math, if you look at math, you have a fractal is basically something, an image where if you zoom into that image, you're going to see the same image appearing over and over again. It's going to basically become the same image the more you zoom in. That's a very, very bad explanation of what it is, and I'm sure Victor is laughing right on under his mask of me trying to explain that. But basically what it means in technical analysis is this is one move on the daily. Okay, so if you zoom in on this move, if you look at the 4 hour and you zoom in on this move, you will see a trend. So one move on the daily will be a trend on the lower time frame. So let's say one move on the daily is a trend on the 4 hour. Now you zoom into that trend on the 4 hour and you will see a whole universe of different market structures on even the lower time frames with ranges and trades and trends and ranges and everything. So we have an example here of what I talked about with the break of structure. So this is one move on the daily. And even though this is one move, you can clearly see the same structure we talked about, where you have one low, equal highs, higher low, breakout, retest of the breakout area. This is exactly what we talked about, where you have a downtrend coming into a level, forming a double bottom, breakout, retest of the breakout forms an uptrend. And this happens over and over again in all markets, but especially on Euro NCD. You can see a similar pattern being formed here with a low, lower high, lower low, lower high, lower low. And then you have a breakout here. And then it retests this general area here. And then that forms an uptrend, goes into, could be some type of range here, right? Break the range lows. And then this downtrend forms a double bottom, break and retest of that one, forms an uptrend. And then here again, it forms a range. And it comes down, it breaks that range low, retest, forms a downtrend. And what do we have here? Double bottom with a break and retest of that neckline again. This pattern repeats itself over and over again on all time frames. This is on the daily. If we zoom in on this move right here, I'm going to mark this out. Then we're going to go into the lower time frames. I'll show you what I mean. So we go to the 15 minute. Now remember, we go from the daily to the 15 minute. And we're going to be looking, I'm not sure. Yeah, so we have it here on the 15 minute. Now we see that we still have the idea of having a primary trend. So this is when we go into the idea of trading with the trend. So what does it actually mean to be trading with the trend? In my opinion, it means you're trading within the secondary trend with the primary move. So remember, the primary trend in this case is an uptrend, but the primary trend can be both up and down. But if you trade the primary trend to the upside, you're aligned with, or if you trade the secondary trend to the upside, you're aligned with the bullish primary trend as well. So on the 15 minute, I would say that there's some edge in only taking longs on the 15 minute because of the fact that you're now trading a bullish secondary trend within a bullish primary trend. But if we take a closer look at the 15 minute, you'll see that not only do you have an uptrend, you also have downtrends. And there's a whole universe of different trends here. You can see that here, obviously, you have an uptrend all the way up here. You have a downtrend here. It forms a range. And what do we have here? A break and a retest of this level right here. Same idea, right? You come down into a bottom. Let's say you have this uptrend here. Reach a top, break and retest right here. Form some type of downtrend, develops into a range. Break that one, come down and retest the range highs. And then you form an uptrend here. So learning to identify market structure is I believe, one of the most important things in technical analysis. And if you apply this idea of identifying trends and ranges and then looking specifically at where does the trend end and what can I find the pattern at where the trend is ending, because it's almost always going to be either a reversal pattern or a range. And when it comes to ranges, you will either have a distribution range or accumulation range. And a 1 hour distribution range at the top might be a 4 hour reversal pattern. Okay, so again, that's the idea of price action being fractal. So if you're looking for perhaps a double top at resistance on the 4 hour, like I'm doing, this is the way I'm trading. I look for a trend, comes up into resistance, and then this is going to be my trade. Basically a double top. Will be looking to trade it like this. But this is also going to be a range on the lower time frames. So that's the whole idea of price action being fractal. Now, as you've seen here, you've seen multiple examples of the double bottom. You have, for example, here, we talked about a daily double bottom. This is almost visible as a double bottom on the 4 hour as well, if you have a bit of imagination, I guess. You can also see you have a level here where
there's a market shift there, and
yeah,
once you're accustomed to look for these things, they become much more obvious to the untrained eye. It looked like random price movement, but it isn't. You see it before it actually changes direction, it making higher high, breaking the structure, shifting the market structure. I think that's this what you're talking about, Jonatan, is very powerful. A lot of traders.
yeah, I think we can do an experiment. Okay, let's do an experiment. We'll just go back to, we'll go to the daily, and because it's one thing looking at historic price action, you're saying, oh, this happens here and this happens here, but let's actually take a look at the market. So just picking a random spot on the chart here on the daily, and I'm choosing the daily so that I don't see the 4-hour market structure. And then I'm going into the 4-hour, and let's do an experiment here. So let's try to mark out the market structure here on the 4-hour, and let's try to predict price movement based on what we know about market structure. Because if you know what market structure usually looks like, then you can also know what's the most probable way of price reacting. So what I do is, we have obviously the low. So I'm gonna be marking out the general lows and highs, and this will be different from a lot of people. I will not mark out the same swing lows as you will. We will not look at the same market structure. We will not be adding the same horizontal levels. And this is why I'm always telling you guys, go to Euro NCD, spend hours. I mean, like Henry says here in the comments, I've been back testing Euro NCD for hundreds of times, and he knows this because we've been doing this together, me and him as well. And we've back tested Euro NCD for a long time. So I know this price chart, which maybe is a bit cheating here, but this particular time, I'm not sure. But anyway, I'm going to be marking out the general highs and lows here. And then we're just going to try to see, okay, according to market structure, what should happen here? So we have two things that I'm watching. We have a horizontal level here. So if Euro NCD would have bounced here, that is a break and retest of its support level. To be fair, it might be a break and retest of this level below as well. But if price would have formed a bullish structure on that level, maybe a bullish engulfing or a bullish pin bar, that would be a signal that Euro NCD might be moving higher. So what do we have now? We have what I believe could be a change of structure because we broke obvious support. So I would be looking at two things. A possible continuation, and that would simply be a bullish reaction to this level and a reclaim of this level. And then I would be looking at something like this to continue. But we might also see failure. We can see a bounce here and failure of reclaiming that level. And then we might have something like this. And we also have a good example of a break of structure right here when we had an uptrend into a range. And then we broke this range lows, and that broke the uptrend. So let's play this forward. Now, obviously, I did choose a bad place for this because structure is not obvious. But as you see here, we do have a reaction to this level. And then we have failure to reclaim the level above, and then we break down. So here we have a break of the trend. We broke the first support, and then we broke the this support below. And now I believe we have potentially a start of a new downtrend. And I'm looking at this as a high, and maybe here we have a lower low. And the idea is to look for the next high. Is the next high going to be a higher high or lower high? If we have a lower high, then that is...
I don't know about this, but I reckon it's going to be a lower high, to be honest. Maybe I'm wrong, but that's what it is.
Okay, let's see. So now... Okay, so now you see that we have, now the way I'm looking at this is one trend and a second trend. So perhaps we're looking at a primary bullish trend with one uptrend, one down move, and one uptrend. Because what you have here is a low, a high, a low, a high. We might get something like this. That's also a valid trend, but you have to take into consideration the fact that
It
also
needs to
double
break
top.
that area first. Like
Yeah,
if it
so
breaks
let's see
that
what
area,
happens here.
fine. It's still
And now we have equal lows here. But quite messy price action, but we do have that equal lows. Now this
before we
might turn
continue.
into a. Let's see.
What do
Might turn
people?
into
What
a.
other people say in the comments? What do other people think now? Because I think it's going to come down. What do you guys in the comments think is going to happen right now? You've got the overall trend. You've obviously got a higher high, a macro higher high, and you've got a higher low, and then you've got the intra macro trend. If you're on the lower time frames, you've got another trend there. So we're saying a buy here. It's coming down. Okay, what are other people thinking?
To be fair, that's
break
actually
resistance.
higher high.
So you think it's going to make a continuation of the overall macro trend?
Well, I think if I'm looking at this, I've taken into account what we know about identifying trends. This has no general direction to me. It does not really give me a sense of direction. When I look at this, I would not identify this as a short trend right now. If this move would have happened up here, then that would be a sure uptrend to me. But right now, I'm a little bit hesitant to say that this is a trend. We're at what I would call a decision area. If we break that high, we're probably going to start an uptrend. If we break this low, then that is confirming also a reversal pattern here, potential head and shoulders as well. It's not perfect, but you see the general idea here, and that would most likely, in my opinion, start a downtrend. So let's see what happens here. So now we now we have a range. Okay.
Yeah, we got
So now we started with identifying a trend. Okay, we looked at this as a trend. Now we have a range. And if you're going to be following a trend, now of course it's a range, but it has bullish characteristics. And why does it have bullish characteristics? That's because the highs are higher than the previous highs.
The lows, you mean?
The lows. Thank you, Victor. So let's continue here. I think we're probably going to move higher. I shouldn't say stuff like that because it's going to move down and I'm going to look stupid, but let's see. Okay.
Okay, so now I look at that. I feel like it's breaking structure in a way as well. So you obviously got that, but then again, you're in a range. But I feel like it's going to come down at least to start off a new downtrend by the looks of it. Let's continue.
Yeah, I mean, it kind of, to me, this feels like distribution in a sense. So, but it doesn't really matter what I feel, right? We'll look for a break and retest setup here. Basically, we'll look for a new trend to form because right now, I don't really see a trend. So the idea here is for me to try to see if I can identify a new trend. And now obviously this turns into a bullish trend. We went from a range to now all of a sudden.
Hold on there. Can you go back a couple of bars? Right there. Yep. If you just look at this market structure and notice the difference here, it's not clear it's going to break yet. It's at equal high. It doesn't convince you right there. And move forward a couple of bars and notice the difference, how clear the picture becomes. Once it takes out, I think that big bar, when it breaks out and it's not a fake out, it actually closes there with power, with confidence. That's a complete different signal that the market is giving us than before. And I think that's what you need to be reading when you're reading market structure. When it's those cues in the market where it goes from uncertainty to certainty. Of course, it's not guaranteed it's going to continue, but where there's a shift in the signal or the message the market is giving us. This is clear to us. A few bars before it wasn't, and I think that's the nuance. That's the tape reading a skill that we need to cultivate.
Absolutely. I'm going to go to my backtesting layout here. So I've been backtesting a few things here on Euro NCD, and I think it could be cool to go through some of the some of the ideas I've tested. I have 1, 2, 3. I have 4 or 5 setups here, and we can look at those and then see if it makes sense according to what we've talked about here. So let's see. We have a few trades here. So what we have here is, see here we have a downtrend, right? Now we see that this would also be a good explanation of how I'm trading this, right? So we have this is a daily level. Okay, that's on the 4-hour, but I'm pretty sure that's a daily level. We go to the daily, and you see you have a daily support here. This is obviously high time frame support. And the way I'm trading this, I'm looking for high time frame levels, and I'm then looking for a 4-hour reversal at those levels. So if that's the trade, it's by no means a perfect trade, but it shows the idea quite nicely. So this is another trade I tested as well, and it has the same characteristics, right? You see how this overall downtrend, again, this is the primary trend, and then these are the secondary trends. You know, that uptrend right here, that's a secondary trend within the primary uptrend. And we see that price comes down, hits the general area. Now, I don't really care about price hitting the level perfectly. All I care about is, do I have a reversal pattern, and what does that look like? So here we do have something forming, I believe. Otherwise, there wouldn't be a setup here. So let's see what we have. I do suspect that these double bottoms with that move here is what prompted me to go long here. So let's see what we have. Yeah, that's a strong breakout area. And then when that level breaks, I want to have my entry orders on the last high pre-break, because I now view this as a sort of a bottom, a possible bottom formation. It's still a primary downtrend, but it's giving me the idea of higher highs and higher lows, because we can now look at this as a secondary trend, and that's the secondary trend that I'm looking to trade. Now, of course, we went up and we hit that TP, which is the FTA, which in this case is the last high. And then let's show you the other trade, because we're obviously coming back down to this level. And I think this is where the bigger reversal happens. So now we're inside the level. Actually, you know what? Let me hide all of these, and let's see if we can trade this follow price action, you know, one candle at a time, and see if we can get a trade in here. There's no signs of a reversal yet. Remember, we want to have like a double bottom, maybe a higher high, higher lows, a break and retest, something like that. Something that confirms to us that we have something happening. So right now, I do see the potential of this being a higher low. Okay, we come into the daily level. We have high, you know, a primary trend is bearish. We have lower highs and lower lows. And we have the potential of forming a double bottom or a lower high. And if we break this high, that's exactly what we're going to get. So now we have that W formation. What I'm looking at is this. So now I want to break out. I want this level to break to the upside. And that would confirm that we're dealing with a bottom formation. And that's the candle I'm looking for. That's the confirmation candle that's breaking this high. You have a downtrend, you have equal lows, and this now forms a higher high. And it's all happening at that daily high time frame level. So you had a downtrend, general downtrend coming into the level, starting an uptrend, down again, and I believe that this would be the start of a new uptrend. Let me see if I get this right. Now, there's two ways to enter this. Either what I do is I enter on the last high pre-break, which would be either this one or this one. I do think that this was the one I selected, but it doesn't matter. Let's just play this through. Let's say we have an entry here with stops below the level, and we'll see if we can trail our stops on this setup using the same principles. Yes, you see right here, it hit that last high. So let's just assume that we did enter on that one, and we put our stops below here. And now we're going to be trading our stops with the same principle. If we have a higher low, then we will move our stops to that low, and I'll show you what that looks like. Okay, so now obviously we have a higher low. As you can see here, this was the beginning of a new trend. The idea is definitely confirmed now. We have a downtrend at the high time frame level, which starts to form an uptrend. Let's just continue to trail a stop up with every new higher low. So if we get a major breakout here, I'm just going to move my stops up here. And then if we have another breakout here, I'm going to be looking at this as the new level to move my stops to. Okay, I'm going to stop that here. So now we have that would be like a 2-hour trade. But now we're going to be seeing is, can we get continuation of this trend? Let's see. Okay, so now well, you know what you can see here is obviously we managed to identify the very low of this whole move right here. And that's the key takeaway here. If you're able to see a break of structure in a downtrend and you combine that with high time frame levels, you're able to quite with fairly high probability say that this is where I believe that a new trend is going to start. And if you're able to trail your stop, or if you're able to trade this up to the next high time frame level above, which in this case would be that one right there, you'll able to put in some really, really good trades. And I think this is one of the most basic ways of trading, really. And I do recommend that everyone do focus on try to really focus on identifying levels. Now, with that said, what I showed you here today is just a small piece of what I'm going to be talking about in the bootcamp week. So in the bootcamp week, you can expect to get something similar to this, but in a very, very organized way with assignments. So you'll be able to go through it step by step and then go through the assignment as well. So this is just a small example of what I'm going to show you now.
And everyone,
exactly,
hit that like button, because this is how a legit prop firm. This is what we do, right? We focus. That's what I was referring to. We're focusing on you as a trader. Where do you get this kind of help, support, reaching out to you, offering you, kind of education, things to help you, knowledge. What else? What else do you? Where else do you get
what else
this
do you
kind
need?
of content? What else do you need? Basically, that's what I was going to say. Yeah.
Oh, one more thing. If you go to the in the link in the description, we have a special giveaway today. We're trying something new here. Okay, so on that Gleam link to the giveaway link, we're not doing a regular giveaway today. We're actually asking you to predict the price of Bitcoin, and it's closing in 10 minutes. Okay, so that competition is closing in 10 minutes. Everyone who wants a piece of the action need to go to that Gleam link in the description, and you have to fill out a Google form. The competition ends in 10 minutes, and in 45 minutes after the close of the hourly candle, we're going to be looking at the 15-minute close at 15:45 CEST, which is GMT plus 1, I believe, or 2. I can't remember. But 15 minutes before the live stream is ending, we're going to look at the price of Bitcoin on Bitstamp, and the one that's closest will get a 20K bootcamp account. Now, again, we're testing out something new here. There might be some errors, so bear with us here. We're going to try it. If it doesn't work at all, we'll just go back and try the regular giveaways like we did.
CEST is Central European time, and that is UTC plus 2.
Thank you.
It's going off what the whole thing that we were talking about we mentioned, very similar, is a trade that we took actually yesterday. So yesterday, I'll put on the screen. Is it Euro NZD? Yeah, it was Euro NZD. So yesterday, if I just take the trade off, I was looking at Euro NZD, that we've had this quite clear downtrend. So we can quite see we've had the lower highs, lower lows, lower highs, lower lows. And then we actually saw something a little bit different. I would say that was a little bit of a change in structure. And that's from this area here. We see that we broke actually all of these highs right here. And we've been actually consolidating for a solid probably few weeks. Now the trade idea as well, you can see all of these, you've got your head and shoulders here. If you want to have a look on a 4 hour, you've got, you can put your shoulder, you've got your head, and you've got the other shoulder here. So that is for you. If you're looking to get into this trend early, you would take off the top of that and you would look to get into any kind of retraces. That wasn't the trade. The trade was after this consolidation. Because I've actually seen that it is broken structure and it's consolidating now, my interpretation of price action yesterday, because we haven't seen this part of we didn't see that the rest of the chart. All we could see was that. So my interpretation is that we were going to come up and we were going to slowly break up and try and break these highs. Now that didn't happen. I actually got quite lucky. And the reason why I got quite lucky is because we did get a let's have a look. We did get the trade, but it didn't actually continue to break even more. Now, you can see we had this consolidation. We had the break above this consolidation, the retest, and then you've got that intraday trend is what Jonatan was referring to. You've got that intraday higher highs and higher lows. And all I'm doing is just trying to get in on one of those higher lows just to take it up to reach a higher high. And that's all we did. So we've got here, you can see here, we had a breakup above which made a higher high, which you can see here. All it was a retest back to the EMAs, back to the 50 fib, which would just go like something like that. We'd take it across and we would aim for a 1 to 2 risk to reward ratio. And to be honest, I got really lucky because you can see the take profit hit right at the top of that move, and that doesn't normally happen. The reasons why I actually there was a support and resistance area, so there was quite a big resistance area right there, and you can see it just tapped that and then it's just dumped off straight away. But that's what I'm saying is you have within trends, within macro ranges, you have those intraday trends, which you can use the stuff that Jonatan is going to teach in the Bootcamp Trading Week to get into your trending trades, for instance, is what I'm trying to say. So that was one example for what happened yesterday.
Okay, we currently have 120 people guessing the price of Bitcoin. It's ending in 6 minutes, guys. So 6 minutes. You have to go to the link. We have it pinned comment as well. You go to Gleam, and you're going to get asked to fill out a Google form. And the first question is the price of Bitcoin. And then also I have a question of what you want to see more of in the live trading room. Do you want to see more live trading or more trading education? Right now, 56% wants to see more live trading. So if the majority wants to see more live trading, that's what we're going to be doing. We're going to be throwing on the MetaTrader platform on here stream and start trading live for you guys. And of course, we're going to be mixing that with trading education. So right now, the result is pretty much what I've expected. You want a healthy mix of live trading and trading education. Right. So the responses are really coming in fast here. We got 140 people now predicting the price of Bitcoin. It's not sure what I've given myself, getting myself into here, because I actually have to go through these responses and see which one is closest to the actual Bitcoin price, which I think is going to be easy. I'll just, yeah.
So
no problem.
This is super difficult, yeah, because as soon as I close that trade, let's put on GU. I actually got out. I got out of a GU trade. I did take a loss because I was looking to maybe take a little cheeky scalp, which I closed early.
By the way, it's Bitstamp. Sorry to interrupt you, but it's Bitstamp. It's BTC USD on Bitstamp.
Okay. So yeah, you can see the trade that we had yesterday that I decided to close because I didn't like a price action. We got took out right in an area where afterwards it just went down 50 points. So set and forget is the idea. The trade here was, we had a weekly support as we were talking about yesterday. Let me get rid of this because it's all going to be looking like a Christmas tree. The 21 EMA on the support of this area. I thought maybe we would have just like a little bit of a push up. Pound looks like it's actually going to break, in my opinion, break this structure. I think we're actually going to get a full-on break of a candle body underneath here, and then in the next couple of days, maybe weeks, we'll come up here, make a lower high, and then we're going to start trending downwards. That's what I think. We'll be able to look at that in the next couple of weeks and see if I was accurate with what I'm saying.
GU is very, very bearish right here, as well as EU. I think we're really getting some heavy selling coming into the market. And are we seeing USD strength? I'm looking at the Dixie, and it's actually breaking out. We had a level marked out, and it's breaking out. We also have a fairly bearish development on the S&P 500, potentially forming a distribution range right here. And you know what comes after distribution? A downtrend. So not sure why or what's going on right now, but we do have some rather risk-off moves, I would say. Which is very interesting because we do have some volatility on Bitcoin as well. So it's going to be very interesting to see who becomes, who gets closest to the Bitcoin price prediction, which is ending in under 2 minutes. So you only have 2 minutes to get into the giveaway, guys. In 2 minutes, it's going to close. You're not going to be able to get into the giveaway after the close of this 1 hour candle, which looks like it's...
I think there's a nice trade to be made on Euro Pound though, by the looks of it. Yeah.
Let's see.
Let's see if I can get into a cheeky. I could probably get.
Oh yeah, that looks good.
That looks really
long,
nice.
right?
Yeah. Let's just get into this little cheeky fella.
We have Lagarde speaking in 1 hour though. Who cares? I want to show you the screen here. Let me show you this. This is actually an idea I have for Euro GBP, and it looks like it looks good. It looks like we have that potential break and retest, but I think this price action here is a bit too messy. It's a bit too compact. If you look at the 15-minute, it looks good, but yeah, it's probably going to move higher. It's probably going to move higher. Are you going along, Alex?
Yeah, I took along with 0.7 risk.
You're talking about EU pound?
Yeah, Euro Pound. I'm just looking because it's pushing up and it's got a little bit of momentum and it's made, it's just broken up its top of its range, and now it looks like it's making.
Why do you think it's?
Can I open up your screen, Alex, or maybe Victor? You want to talk about it?
Yeah. So, we've had this. Let's put it on a 4 hour. Let me just have a look at here. So we've got, look, all of this clear support right down here. We've had this consolidation as well. Now we've broken up above the consolidation, which would be here. This is, an intraday trade, broken up, retested that area, and now it's pushing up. So it's a momentum-based trade, break, retest, continuation. Close to a 1-to-1. I think I'm risking 700 to make 1200. So Let's see what happens. Pound's pushing down a lot more than euro at the moment. If we have a look onto euro, let's have a look at euro compared to
Yeah, both of them, euro and pound, look very, very weak.
Yeah.
If you see, the structures being formed. Maybe after you finish, I can show my chart.
Yeah. Let me just pull
And
up.
after we've done that, we want to make sure that we also make our own price predictions for Bitcoin, because now that the giveaway is closed, no one can enter the giveaway, and then we'll have our chance of using
Wasn't it
our
wasn't it
analysis to predict.
the price for we were doing the price thing for after the election though? Wasn't that what we were doing?
We're doing that definitely,
doing
but
that.
this is a test run. This is a test run. We're trying. I'm trying how can we integrate that into our current method of doing giveaways, and I also want to do our predictions using our analysis, seeing what we think is most probable for the close of Bitcoin.
Does anybody go on then, Victor? You wanted to just jump on? So you guys now have seen the trade. Let's see what happens when we play out. And Victor, you want to do your analysis?
Yes. Let's see.
Yep. I'm gonna pop your screen.
I'll put my screen. There you go. You got me first. Yes. So what I'm looking at is we've been talking about this, of course, because this is the pairs we analyze almost every. Not almost every day we look at these pairs. The thing that I was talking about, we were discussing, is that we're getting into a weekly demand area, right? Because of that weekly order block. Let me change the time frame so you can see this is the area that the buyers on the weekly time frame defended before, right? By forming this outside bar. So we know that in the past the buyers came in at this area, this structure here. And all right, so that's one thing to consider when you're looking at the lower time frame. The fact that on the weekly it's a demand area, and as also we had on the daily time frame, an area where the buyers came in much more precise than the weekly one, right? And as price was coming in, and as it hit that structure or that area, we had a bullish engulfing that was the close on Friday, right? And I said this is getting interesting because the what's to the left and what's current price action are actually aligned. They're both telling us that the buyers are coming in. Now the next question to be asked is, are we getting follow through, right? If this is going to be indeed the place where the buyers are coming in, what we expect to see is, actually, let me take this away and do it properly. This is the move, right? The last candle that was engulfed. That's the first sign of a possible buyers coming in. And what we need to see is that price comes back into this order block and then moves away. That would be the follow through. And yesterday's candle closed very weakly and forming a bearish order block, which is already something you don't want to be seeing if you're expecting, the buyers to be coming in, right? If the buyers are coming in, why supposedly, right? If that's the scenario, then why are the sellers able to close a bullish engulfing, right? That's indicative of the sellers are dominating. The sellers have the upper hand. And so that doesn't rhyme. It doesn't make it's breaking the order flow isn't there, right? The order flow, and when the buyers come in, they start forming those bullish structures. And the fact that it closes in engulfing, forming a new bearish order block, is putting in doubts the whole scenario of a buy. And as we still have to wait for this candle to close, right? This current candle, because the order block hasn't been invalidated officially by this close, wasn't below the structure.
Is that a puzzle?
But the actual candle needs to close below. It hasn't happened yet, but to the looks of it, so far it's looking very, very weak. It shouldn't be forming bearish structures now if it's going to be switching. So either it needs to the reversal still needs to come in, and that better be today, right? And then close very bullishly and then continue up. And then if that isn't the case, and it looks like it's not happening, if that isn't the case, then this is looking very weak, meaning it hasn't find any demand area, any lasting demand area yet. And if you can't find that, then it's only going to continue to go lower. And you can see that on GU as well. Look, what does the price on the daily, what does the order flow tell us? We have a bearish structure being formed. It has an impulsive move, right, that created that bearish structure. It comes back to retest that bearish structure. And what does it do next? It created a following bearish structure, right? Again, what does it do next? It comes back to retest it, and it's moving away again. So it's clearly order flow is bearish. And if that needs to change if it was supposed to, reverse from this weekly order block, and it's not doing that. So they're not aligned, and that's the importance of waiting for price to tell you, forming those reversal patterns on the lower time frame before you decide to take the reversal or assume it's going to reverse. Waiting for price to tell you it is going to do what you expect to do. This was the area that I was expecting for buyers to come in. Buyers did get in, but they didn't get follow through. It didn't have a continuation of bars breaking structures to the upside. No, it didn't. Close very weakly just 7 minutes ago on the H4, breaking everything, and putting a new low. So it looks very, very weak as we speak. That's on GU and EU.
Yeah, no, I think, you said something with waiting for price to tell you what it's going to do, or waiting for price to confirm what you think it's going to do. So there's, different approaches to this. We have to say that either you have a system with confirmation, or you trade without confirmation. And that's actually a very interesting point I wanted to bring up. So let me bring up my chart here, and I'll talk a little bit about that. So I think we're looking at Bitcoin right here, and this could actually be a pretty good example. So if you're expecting price to bounce at that level, you have basically two options. You either place a buy order at that level because you're expecting price to bounce at that level, and then you will probably have your stops below this low somewhere, or you simply wait for price to hit that level, and then you wait for price action to show you that it's ready to use this level as support. Both of these approaches are valid. I would argue that, for me at least, I feel it's better to wait for confirmation. It's better to wait for price to give you what you think it's going to happen. But both of these ways are valid, and I see many traders trading both ways. They're profitable doing both of these methods. What it's all about is testing. So if you think that entering out without confirmation is a good idea, then test that out. See how many trades you would have missed if you waited for confirmation, or how many trades would you have missed or would have hit your stop loss without that confirmation. That's exactly what I did, and that's why I developed that trend following system with waiting for a bullish engulfing candle. So I can show you one idea of that. Actually, let's go back to EURNCD again. I think EURNCD has beautiful market structure for these examples. Go to perhaps the 1 hour, and we're just going to be finding a good break and retest. Yeah, let's say, let's just look at that one. So here we have a break and retest, and we have two options here. So I think we can all agree that this is resistance. And you see, the way I'm marking out this horizontal level is simply by connecting these candle closes with these, and it just kind of makes sense. It just looks good, and that's basically all I do when I add horizontal levels. I ask myself, what makes more sense, from a visual point of view. And if it looks good and it's a good level, it's very simple. So here we're going to be looking at a possible, actually I would say a breakout, trend reversal, a trend continuation, because it kind of looks like this has bullish characteristics here. But we have that breakout right there. And when we, okay, so that's good. So when we start coming down for that retest, we have two options. Either we're just going to be putting in blind orders. And what I mean with blind orders is putting orders into the market, anticipating that the level is going to get hit, and then for price to start to reverse. Yeah, Victor, go on that break. I know you. I know you want to break, so let's.
I'll be right back.
I'm giving you permission.
I'll be right back.
So yeah, there's two different ways of. Look at Alex. He's so incredibly focused on what I'm saying right now.
No, I'm waiting to see just what happens with this euro pound position, because at the moment it's doing like
it looks like
it looks like it's barcoding in a way, but I'm just waiting to see that next push up. Sorry, I'll just show you what I'm talking about and then I'll let you carry on. You see what I mean by the barcoding on the 1 hour?
Yeah.
So we'll see what happens. If it could come down, it could take me out, do that kind of barcoding pattern that everybody is noticed to see, and then go back up.
To be fair though, looking at the 15-minute, it looks like you have it looks like you reclaimed range highs. You kind of like have a range above the previous range, which usually is bullish.
Yeah, so I'm just paying attention to that anyway. So you carry on. That's the reason why I'm quiet.
Right. So either wait for. Okay, let's. It's very difficult for me to find out actual support and resistance as marked by you. Can you please explain the definition which validate your level of support and resistance? Yeah, okay, so at this point in my trading career, I don't really have any rules that I follow when it comes to horizontal levels, because it's I think it's just routine at this point. It's a habit, it's a routine. I've followed certain rules in the past, and those rules are now basically is part of me, but I'll try to explain as well as I can which rules I follow. So when you're adding a horizontal level, you want to have an area on the chart where price has reacted to. That's basically what a horizontal level is. It's just a horizontal line or an area where price is reacting to. So if you have an area on the chart where you had many reactions, you have a level of interest, right? So let me explain that. Here, you obviously have an area here where price is reacting to, and then you have movements here and all over this. You could say that, yeah, this is a level where price has reacted to, right? And we can all agree that, yes, price is reacting to this level, but only that criteria won't really give you a good horizontal. You also want to look at the numbers of times that price has reacted to that level, and you want to look at the violence of the reactions. You want to look at the momentum coming out of that level. So if you look at this level here, that's a level, that's a reaction, right? And it's a strong reaction. Same thing here, strong reaction wants to test that level again, and then again a strong reaction. We go back historically, fairly good reaction, here's a very strong reaction, and then here as well, strong reactions. And let's go back even more. Well, you have right here. Okay, so now we know we have an area where price is reacting to, and we have violent, strong reactions at that level. And now we want to look at the number of times the level has been tested. Okay, so obviously the number of times the level has been tested, and then the violence of those reactions. And this kind of checks out as a general area where you have price reacting to the level. And then we have historical significance, right? You want to look at historical price data. How long has this level been in play? You can go back. Well, it's been in play for a very, very long time. Even here, you have a violent reaction at that level. Here you have a range where this is range lows, range highs, this reacting to the general area right here. And we go back to, so this is back in 2020, which you also have some sort of reaction around that. So historically, very strong level. And then also you want to ask yourself, if the level has been used as support and resistance, it also adds validity. What's the word?
Validity. Validity.
No, it's not.
Validity. Yeah, you never heard of validity?
No,
That's
no
how
way,
you
man.
say it.
Is it that? Really?
Seriously? Yeah, it's validity. You never heard of validity?
No way, man. Oh my god, that's funny. Yeah. Saul told us to be professional, so we gotta stop at that.
There's a fine line of being professional. You know, we can be professional and we can just be our normal, handsome, funny selves. You know?
Yeah. Okay, okay, so now we know that this is a good level. And one way of also identifying the level, sometimes you want to remove the noise. And a good way of removing the noise is going to the line chart. So the line chart is just where you basically connect every candle opening, okay? And you remove the wicks basically. And it's every low is a candle open. And here you can clearly see that you can see the violence of the reactions more nicely. But then, of course, sometimes you want to add the candles again to see where the wicks is, because a lot of times I do prefer using the candles. I do prefer using the wicks. But now, how do we add the actual level? Okay, we can use horizontal levels, but a horizontal level is more about an area. It's more about a zone of interest. It's not an actual level. So what we do is we go when we use the rectangle tool, okay? And we know that this is the general area where we have price reacting. And we want to have as much of, okay, so let me put it this way. We want to have as much of price action possible put into this rectangle while making the rectangle as thin as possible. Yeah, what is volatility?
It's our new indicator. We're gonna have to stick it on this euro pound trade, because I'm probably going to hold this through news if I get slipped.
Oh, that sounds like a very good idea. You're gonna get stopped out.
No, I don't know. I don't think so with this one. Seriously,
you're trying to explain it.
I'm still risking the 1%. When I get slipped, I'm taking into account that if I get slipped, it's going to be a 1%.
Okay, is it a good idea to be holding trades like that over news, just to people know?
It's not high impact news. It's the Bank of England gov speaking, so I don't think it's going to cause that much volatility, but we're going to see. And if it is going to cause that much volatility, we're just going to put the volatility indicator alongside the main indicator, and we're going to just
Good. Okay, back to horizontals. Now, how do we add horizontals? So first, what I do is I look at the candle closes and opens, which this is a good level for that. We have that one, and then we have that one. And remember, we want to have as much price action as possible within this rectangle, with having the rectangle as small as possible. So I'm going to use that one, and then I'm just going to connect it with that one right there. So if I move this to the right, you'll see that I'm incorporating that wick. Candle closes here, the low of that wick, and then this right here. So I like that. Now let's see if we can move it to the left and see if we incorporate all touches of that level historically. And I think this kind of makes sense. You can also see, but I do feel like the low of this rectangle can be a bit smaller. Let's see if I can actually make it like this, incorporate that wick right there. I think this kind of makes sense, because now we have that wick testing the middle, we got that wick, and then these wicks right here, and then we have, it kind of makes sense. So that's how I do it. And it's more of an art than a science. Okay, it's not really, I can give you the overall rules for how I add horizontal levels, but what it's really coming down to is screen time and looking at markets. The more time you spend looking at these markets and marking out the levels on your own, the better you'll be at it. And I've been doing this for almost 8 years, so I know I know the levels without really adding the rectangle to the chart.
Some people do it a little bit differently. I'm just looking at the recent price action. I'm just looking for a 3-point touch of an area for me to say, okay, so that is a level of support or resistance. Anything after that, it starts to get a little bit messy, and the line that you've got there looks to me like just like the middle of a range, which is heavy support and resistance. And I bet you if you got market profile there, you'll find that the market, the majority of the volume is going to be in and around that level. Reasons why I wouldn't like to trade around that level is because it's like very 50-50. You don't know what it's going to do, and it's like a lot of volume because it can kind of range. You really want kind of the extremes. But when you're looking at that resistance, a 3-touch of a level, a 3-point touch, and there has to be a little bit of gaps in between, is enough for me to say, okay, that's a valid resistance level. But I always take recent price action, because I want to know what price has been doing recently. Obviously, historical price action is super important as well, but also recent price action is what I personally tend to take more advantage of.
To be fair, though, looking at this level, I'm going to show you why this level is important.
Super nice level. Super nice level.
Let's go to the, if we go to the 1 hour, let's just add.
You got your 3 touches there straight away.
Yeah, so this is. I think that's what I wanted to show, right?
Yep.
Where you have the break and retest. And what I wanted to show was either you could put in your blind orders right here and get filled, and then maybe stops here, or you would wait for confirmation. And this is actually a good example of where
Alex
you would get into the
British accent. Total lie.
That's weird. Why do you have a British accent?
Why do I have a British accent? Should we just pop over to the screen? Let's see if this news is actually going to be anything that actually moves, or if it's just going to be a low volatility move. I don't think it's going to move anything. I don't think that's why I'm not getting out of this trade. We've got 30 seconds, 40 seconds. If it was a bigger, CPI or inflation rates or anything like that, I would probably just close the whole thing, but it's not. So we shall see. Should put it on a 5-minute. Oh, no, it's better on the 15-minute.
Okay, guys, there's some small issue with the Gleam integration with the Google form. It's not able to link. It's not able to link your user login on Gleam with the Google form. So there's actually no way of me knowing which of the predictions are to which user. So I have to look into that. So, but the good thing is I did this on Gleam, which means you've all registered for the giveaway. So we're gonna do the giveaway anyway. Why are you laughing? I'm trying to be serious.
I'm laughing because it's just typical, isn't it? It's just they've put all of that effort thinking about the price and stuff, and then you just be like, well, but no, we'll get that sorted. Maybe
we still have
put it here and do it again for the next.
Yeah, we still have a lot of people who joined here today. Almost 300 people. Lots of people coming in here today. So yeah, well, but this is a this is a test. The reason why my chart is different than yours is because I'm on the replay, so I'm not looking at current price action. I'm using the replay tool in TradingView, looking at the past price action.
Yeah, nothing
Yeah.
actually happened.
Okay, nothing. That's.
But then again,
he's speaking though. Like he's speaking.
Yeah, it is.
Yeah. It's not
it
like
is
he goes out and just starts screaming everything at once.
Yeah, yeah. So let's go back to the teachings because nothing's actually happening.
So, back to what? Back to teaching. Did you say teaching?
Yeah.
Yeah.
You were doing some
I don't really have.
cool stuff.
I don't really have much to. Yeah, he speaks very low. That's the problem. He needs to speak louder for the markets to move. But yeah, okay. So what I wanted to talk about in the very beginning was how to be able to sometimes you won't get a break and retest of a horizontal level. Can you talk about the bootcamp week? Yeah.
Yes, we can.
We can talk about the bootcamp week. Okay, so the bootcamp week, we got, like I said in the clip, we have 8 different expert traders who are in different segments and sessions during the week, and you can get all the information in the link in the description. You can sign up for the event. So you go to the link in the description, you sign up. It's going to take you to a website where you get a lot of information on this as well. So what you'll have is 8 expert traders who are going to run you through a couple of different trading strategies and trading setups, as well as building a foundation for your trading. We're going to be talking about different types of trading styles. We're going to talk about, of course, market psychology, and we're going to talk about risk management. And the idea is to give you all these bits and pieces, and then we're going to be putting it all together and basically teach you how to trade, how to build a system. And then at the end of this bootcamp week, you're going to get assignments for every day. You're going to have different assignments, and at the end of the week, you're going to be sending in those assignments. And if you've done all the assignments correctly, you'll be able to buy a 20K bootcamp account for only $10. Okay, so 20K bootcamp account, cheap, and then you can use all of that knowledge that you learned throughout the week on this bootcamp evaluation. The link is in the description. You can also go to btw.the5ers.com. That's the link that's in the description as well. You sign up, and you're ready to go. You sign up, and then you have all the information you need on that website.
I just want to make something clear as well. We've got a lot of different types of traders, beginner traders, and we've got advanced traders. So don't be alarmed if you get there on the Monday and we're doing very, very basic things, because we've got to give, a whole foundation to absolutely everyone. Even if you are more advanced traders, you've got your own edge, you've been trading for a while, stay with it. Come back to maybe some of the do some of the assignments, come back for the later parts of the content, because it's all about picking little things that you can add to your edge. I remember we'll do the London trading show, and one of the biggest things that I took from all of the different people that were talking is that there's always something you can learn from somebody. Obviously, don't take everything that we say and say, okay, I'm just going to change my whole strategy and just do this. No, we're very different traders. We trade differently. We think differently. But you can always find something in those conversations and that content that can suddenly change everything. So there you go. So that's the website.
So and how much does this event filled with knowledge and experience? How much does it cost?
It's for free. It's for free.
It's free. Yeah. It's 100% free. Not only is it free, you go through it and you get a massive discount on a bootcamp evaluation.
I think we've got a correction. It says 20 USD in the description. So we got it's a 20K bootcamp account for $10, but that's only for people that have completed all the assignments and things like that. So it's going to be a really, really cool challenge, and I think anybody that is really interested. What?
No, never mind.
We've got some news we've got another speech for Euro, which is actually high impact news. So we'll see what happens with that.
Yep. I'm just getting some stuff done here in the back end. So if you...
Okay. I've just muted, Victor, I've just muted you. There's some funny noise in the background, so I'm not sure what was going on.
Really?
Yeah, there's quite a fuzzy noise. I don't know where it's coming from.
Is it still here?
It is still there, yeah.
Okay.
Yeah. Is there any...
I can't
Should we go through some...
I can't hear anything.
No, he's muted himself now.
What about now?
but I
I'm
can-
unmuted now. The here it's silent here.
Yeah, it's quiet.
Okay, maybe it's my headphones. Should we go through some different types of charts? What is everybody looking at? Do you want to just put something in the comments and then we can just have a look
I think
at some of
Alex, we with the trend following that we talked about, maybe you can show how you can follow a trend with the EMAs. So if you don't have a retest of a horizontal level, maybe you have a retest of like an EMA instead.
Yeah, let's go for something. Let's pull up. Yeah, let's pull up a chart then. The blank chart. RSI, EMAs. We'll talk about the RSI, how that can help as well. Perfect. So what have we got here? So if we go on to a daily, so there you go. We've got an uptrend, as you can call it. You've got a higher low, a higher high, then you've got the higher low, so on and so forth. Okay. Now that is the overall trend. So anything in between this higher low and this higher high is basically going to be a range. Until it's broken, this is going to be, we're going to presume that anything here is just going to be a range. This is going to be the range top, this is going to be the range bottom, and we're looking at price may possibly oscillate between these two levels until one part of it breaks. Not ignore what you're seeing right now with price action. It's going to go down onto the 4 hour, and we're just going to have a look at this top here. Now, here you go. You've got so many different equal highs here. Now you can say that this is a shoulder. You could say you've got the head here, and there you go. You've got another slightly lower shoulder. Now you've got the break of the neckline. You've got the break of the neckline, and then you can say, okay, there is a possible for price to come down from this area. It could be just for on a macro retest of a 50 fib. It could be a retest of the 200 EMA. It could be anything. Okay, it's not important. But what we're actually going to do is see what kind of intraday trends we can actually get on here. Now the EMAs, I only use the EMAs really just to, if they're sloping down, if the 21 EMA is sloping down, that's just shown to me that price on the 21 candles prior they're starting to get small and they're starting to come down. That's why you see that sloping price of the EMAs. I don't really use them like that, but I just use them for dynamic support and resistance. So we're going to go down to a 15-minute chart. And now, okay, see the trade is coming into the red. Let's go here. All right. Here we go. So now you can just see we've got, and within that range that we've just marked out, you've got the high and then you've got the low. So within this trend, you now got a intraday trend. Now, unless price was going to come up and take out this high, I'm just going to continue just to sell pound until it actually does that. So we're just going to follow it down every single low that it's made. So there's the lower low, then you've got the higher low, so on and so forth, until price breaks up above that lower high. I'm not looking for a change into intraday market structure, and that's all you need to do to identify trends. I wouldn't be looking for anything, anything that is coming into a 50 fib like that is just an ideal area just to keep selling it. You've got the retraces up to the EMAs. That is a lot of resistance. 50 fib. They're just pockets of trades that you can take. Let's have a look here. And that's really it. Now, pound, I wouldn't even think about buying pound really until it actually on a swing, until it actually breaks up that level. If price actually comes in, see it's coming up to support anyway on a macro level. If price can get up above that, can get a retest, it makes a shoulder, and we get something like that, now we can think of maybe the overall trend is going to continue. And the really nice trade for that would be an expectation of the right shoulder or the break of the neckline and the retest of the neckline for that continuation. That could be a really nice macro trade. If you're on a 5-minute time frame, or you want a really day, you're looking at like a day trades, things like this as well. So you've had this big push down. You can have a look at, okay, you see the prices found support in this area here. Then you've got the top of that range, which you could say, well, it's not the best examples, but you could say up here, the break, the retest, and the continuation to hit the 200 EMA would be a lovely trade as well. Taking that leg and seeing if it hit that 50, probably not. You probably wouldn't have got that 50 fib retest. That's really it. That's the way I look at it. I don't know if that's actually very well explained, but if you got any questions, then let me know.
Yeah, we had about 15 minutes ago. We had the head of the Bank of England was supposed to be doing a speech, and if we look at GU, there isn't any reaction to that speech. Yeah. It's just continued weakness. So that's important to know that apparently the market was didn't expect much strength from that speech, and they weren't disappointed.
The thing that I'm looking for, the thing that I would say though, because this is still on an uptrend and we still haven't had a close, we're still in the week, this can easily turn into a pin bar. This can turn around, yes, find support, yes, turn into a pin bar, lock all the traders going south, going shorting, and then you got the bids to come back into the overall range and the overall trend, to then start pushing back up. So that's why I'm like, probably selling down here is probably not the best idea, because you could be one of those trap traders. I would wait for the close of the week to make any big decisions. And if you're on the lower time frames, all you need to do is just find a simple change of character in the market structure. So this is made up.
Yeah. What you said is crucial, I think. As a seller, at least in my mind, I want to be selling something at a supply zone, right, where there is resistance, and that's not where we are right now. We are, showing a lot of weakness, but it is not at a supply zone. I want price to come back and retest some supply zone, and that's where I want to be getting in on a sell as it's breaking back and to the overall trend, which is to the downside.
Yep.
So it's and that's typically the difference between trend traders, right? Trend traders, they want to be buying that breakdown. They want to be buying the breakout of a consolidation. But to me, if I were to do that, then I need to be putting my stop on the other side of the range, because it's a fake out. It's going to come back and it's going to chop me out. So it's a difference in mentality or approach depending on what kind of trader you are. But to me, the best value is waiting for price to come back at a place that it's supposed to respect. And as long as it's doing the same sequence it has been showing in the past, in the recent past, you're going to be just going to be fine.
100%. I think it's marking out market structure and just seeing where highs are getting taken and retests and things is probably, in my opinion, some of the easiest ways of trading.
Yep.
And let's have a look on gold, see what gold is doing. So this is actually quite similar to the way that, we were looking, same kind of thing, you've got shoulder. You can call that. You've had the breakup at the top. Breakup of that kind of pivot. And just a continuation. It would have been really difficult though to get into, because where would you have taken your fib? You could have taken it to there. You haven't got that. It's quite a difficult trade to get in. Maybe if you found on something on the 5 minute, maybe there would be an easier trade here to be taken on gold.
I don't know. I think gold on the lower time frames now, it's just.
I think gold on the lower time, as long as you put your stops in places where they're not just going to be used just to find liquidity. I think that, like, if you're putting your stop, just where, at the top of equal highs or equal lows, or the last pivot, just one pivot away, well, you're expecting for it just to get stopped out, aren't you? If you take it maybe 2 pivots away, then maybe you would have been fine. Like, let's say, for instance, you were trying to get into this trade, a break, retest, continuation, and you were like, okay, I'm going to put my stop underneath that low. There you go. You've just been taken. But if you're trying to if you hide it at least under two pivots back, maybe you wouldn't have got taken out. And the reason being is, that for me, that retrace isn't a deep retrace at all for that to say, okay, that is a higher high. For me, the higher high would be there, because you can see that the most reaction came from that move, and then the lower high would have actually been to be that area there. And all of this is just the range at the end of the day. All of this price action now is just a range. So anything in here, until it breaks that pivot and closes under, that's still just a range.
The problem with that, though, the problem with that is the risk to reward. If you go too lows down, the risk to reward of that move is just so low, right? I mean,
yeah,
it depends on where you want to buy, but I mean, the lower your stop loss goes, the higher price has to go to the upside as well. So it's and this right here, I think this is just quite difficult, because when you do form that low, that new low, that's kind of like when you form the range as well. So I think that's
quite nice.
Me,
even there, you've got a 2-to-1 risk to reward ratio there, because if you get onto the 50 fib, you've got that break of, because this is a nice little pattern as well. If obviously we don't use patterns too much in our trading, all of us, but you've got that kind of flag pattern right there, which we see just in crypto, we see in mostly stocks and crypto and things like that, things that really do trend. They really like this kind of price action. And if you just saw the break of that kind of range, then you've got the retest on the 50 fib. You would have got that trade eventually without being taken out, and that would have been a 2-to-1 risk to reward ratio, which is a nice trade. The difference is you've got this one here though, which again, if you're looking at this, you've got the last pivot of that higher high taken to that. Would you have got that? No, you'd be still in that trade, and you probably would have been taken out with that one there. But that's what I'm saying. With gold, it really likes just to come down, spike people out, and just continue up. That's why you probably say gold on the lower time frames is an absolute nightmare, because you're putting your stops 1 or 2 pivots before, and they normally get raided by these moves as well. So I get what you're saying, but the time that I was playing around with gold, it was so much fun. It was fun to trade. It was really good.
Yeah, maybe I can
Yeah,
show.
and
I can show
it's breaking
gold.
out now. By the way, gold is breaking into new all-time highs as we speak right now.
Yes,
Yeah.
maybe I can indeed show the opportunities if anyone is interested. It's a
Look
counter
at
trend,
that
of
god
course.
candle. What was that?
Yeah,
Oh, it was zoomed in. It's like
I'm
Yeah,
gonna be
that
back in
this.
just a second.
All right, so this is the this is gold, of course, on the daily time frame. You can see how the strength this is, right? How strong this is. Once it forms those bullish structures, it doesn't even come in to retest them to continue, and it does it again and again. That makes me think, who is in control? Obviously, the buyers are, and it's more likely to continue unless it shows us something in the opposite direction on this time frame, which it isn't doing, right? So that's one thing. But if we go to the lower time frame, and I was just going to say this before it broke out, the structure, this is the H4 order block that we had, and it came back very quickly, or relatively quickly, so quickly that I consider this to be a fresh order block. So for today, if price of gold is going to retrace a little bit deeper, right, this is the area where the sellers are likely to come into the market and defend, because that's what they did in the recent past. So that offers us a little bit of a offer, maybe in past tense, offered us some opportunities, because now it's clearly that they don't have a grip on the market. But if you go to the lower time frames, right, we see here, the sellers are not coming back to the market, right? Based on the order block here, you can expect that the sellers would be coming in, and they're not coming in. So that's something we need to wait for to happen first. Here as well, you can see the order blocks being formed. The structures are bullish ones, right? They're not. Before that, there was also another bullish order block that was formed. The sellers are not coming in, but if this is the point where it can still, you have 12 minutes in this H1 order candle, that it can still come back and leaving trap traders behind. If we go to the 5 minute, they're not coming in. The sellers are not coming in. But if they were to come in, now it's clearly a breakout. So the structure, I was gonna explain how there was, for a little while, there was a break of structure on the 1 minute. It was only on the 1 minute. If you consider this, of course, you can start the market assessment, the structure assessment from a lower point. But if you do this, you can see that you had a little structure here, right? This was the head, the break of that structure, and it was coming in, and it did for a little while push lower. And I was not expecting, but as soon as it gets back to this area, that would be the last area to me for it to not break the structure and maybe have a little reversal, but it didn't happen. So the market was quicker than I was before I started talking. So this order block is no longer valid. And to me, then I'm not going to use. I don't see any ways of doing it unless, on the H1, right? I don't see any way this can turn well. Maybe in the following order, but it's not showing. Maybe in the near future, but there's nothing bearish about this move. So let's see how it closes. If it starts forming bearish structures from now on, for the next couple of hours, and if it does, it would be a great place to trap traders, right? All the breakout traders who are, buying that breakout from this when this high delineated or indicated by that horizontal blue line is taken out, there's going to be a lot of buyers here. So if this returns quickly and close and start forming bearish structures, that would have been, and you can find some kind of a reversal pattern in here. That would be great. For example, if we go deeper in, right, we zoom in, this is the 1 minute. What you want to be seeing is, this is the structural line basically right now, right? This is the neckline it needs to take for it to turn around and form a reversal pattern. And it's not, well, right now it's not doing that. Not only that, it's reacting on that, which is actually a bullish sign. What you want to be seeing is that it breaks it and then you can decide whether you want to be shorting here or there, but it needs to break that neckline to show us it is attempting to go the other way. It's not happening yet, and the higher time frames are at all not giving you any indications of any slowing down, right? Remember, Sat, when we looked at that bar, I mean, that's only bullishness, clearly all bullishness. So it's something that it would be an H4 combined with an H1 structure, right? And I don't even have to put on the 50 fib because this is the last entry order block on that H1 quasi. This is the quasi that I'm seeing, right? This being the left shoulder, right? That the neckline, this would be the head, breaking of that neckline, and then it comes back to retest some structure in here and then move the other way, right? This is a counter trend, and it's a counter to a very, very bullish uptrend. So you got to be careful of, wanting to short this, but it could be a nice day trade if it were to, give us the right signals, which is forming reversal structures or bearish structures as it is going to retest this order block. And you can see, actually here, you can see this is the reaction that you want to be seeing. You want price to come into that order block and then move away from it. And it's not doing that. So the setup is not there anymore.
It's interesting because I think finding the actual pivots of where it would class as a break of structure is, like you say, it's like trend lines and support and resistance. It's an art as well. But I think that the rule of thumb that I would go for is whatever pivot has caused the biggest reaction, that's the area where you would class that as a pivot. If it didn't cause, if you've got a breakup, you've got a little retrace and then a continuation, that pivot probably isn't that strong. The pivot underneath that, made that kind of retracement, that is the pivot. So the last pivot that you've just marked out, the one that you said under that 1 hour, where it caused the last leg up, that's where I would say the pivot of that move. So down the one next to it on the right.
The one next to it to the right?
Yeah, underneath where your mouse is now. I would say that is the pivot low, because that caused a really big move to the upside. So for me to really want to trade, like for me to see an overall trend change, I would like to break that really.
Yes, I agree with you. This neckline was actually put in before this high was taken out. So as this was going up, I would consider the neckline, if my mouse cooperates with me like this, I would consider, as long as this isn't taken out, that would be the neckline, and this would be the break of structure. But I agree with you. Now that we have a price has printed higher prices than the previous high, this now becomes the left shoulder, not the one before that.
Yep.
Making this the neckline in depending on the time frame you're assessing the market.
All right, I think it's time to start the giveaway. I know a lot of people are waiting, and we're coming up to 2 hours, and we're gonna give it some time to make sure that we do find the right person. I've selected one of I haven't selected, but Gleam has selected, and I've put it on my screen right here. So here is the winner of today's 20K bootcamp account. What you have to do now is I'm going to give you a couple of minutes, 2 minutes to be exact, to confirm with your email, and you only have to give me the part of your email that is
blank,
censored here, the red part. If you can confirm that, then
everybody's going to know your email.
Yeah, well, yeah, that's true. Okay, so maybe not.
No, just a couple. There you go.
Okay, well, actually, you don't have to confirm it. Just give me like the last 2 letters of the email, because obviously I know that this is you. But if you can just confirm with the last 2 letters of your email,
we're coming into
so we can confirm that it's actually you.
So this is quite interesting now. We'll see. We've got that barcode kind of structure. If we pull it, we'll get rid of this. So if we put that on the 1 hour, we've got that barcode.
There it is. Congrats.
We've got
Beautiful.
news coming up as well, which we're probably going to see this live in 4 minutes, see what actually happens. Do you know when I was saying putting your stop losses in areas where are just probably obvious, where there's just everybody's putting their stop loss? That's where my stop loss is, right on that bit of support. So, but you know, we're going to hold on to this trade through the news to see. This is
all right, interesting.
7% risk. So we will see. It's also hitting a 50 fib at the moment on the 15-minute. So you see here, it's hitting a 50 fib. The only thing with this that I don't like on this chart time frame is that it hasn't actually broken the top. You know, you've got equal highs and it hasn't actually broken the top of it. It would be a lot nicer of getting into the position on a 50 fib once it's actually broken up the high and then it's taken the retest. But we have got, in 3 minutes, we've got, you know,
Lagarde speaking.
Yeah. So,
and also a FOMC member speaking. So we have both on both sides of the euro dollar. You're talking about the euro dollar as well, right? So on both of them, we have
euro pound.
Euro pound. Okay. On both sides, you have members of the FOMC, well, central bank and Lagarde being the head, talking in 2 minutes and a couple of seconds. So it can get choppy.
Yeah. BTC will touch 64,800. I hope not. Because I'm already positioned. So my Solana trade, not my Solana trade, my Pepe trade has come down quite significantly, and my DOT trade has now come back to break even, which sucks.
What news are we waiting for?
You got ECB President Lagarde speech.
Right, so it's a yellow orange folder.
Orange folder, yeah.
Yeah.
Normally, when Christine Lagarde speaks, it doesn't move the market that much. But lately, we have seen some great reaction from her speeches. So it's something needs some attention to for sure.
Yeah, definitely.
Mm-hmm.
But that's the only thing that's coming up now, right?
Well, there's FOMC, as I said. FOMC is also, there's a member of the Federal Reserve's committee who's going to be speaking at the same time in 2 minutes. It's not the
because it's a speech, though. I don't think it's gonna have any immediate effect on price. We'll see, though.
No. Typically, there might be only the traders will be eyeing for any keywords that they that could indicate anything about the next decisions they were going to be releasing. Right? Is it going to be a little bit more hawkish or a little more dovish than before? Then that could move the market a little bit.
Well, let's have a look. Let's see.
Yeah, I mean, we could have something completely unexpected happening.
Typically, because it's a speech, it's not going to happen on the. It's not going to happen on the change of the hour, since it's a speech.
There is some volatility, though. Clearly.
Yeah, there's definitely, and I wouldn't be surprised if I do get slipped out of this. That's why I'm only risking. If I get taken out, I'll be getting taken out for the full 1%. So I'm taking into account the extra little bit of slippage. That's why it's only at 0.7 where my stop loss is. And there you go. Let's see what happens. Not really anything. It is a speech.
Yeah, when it's a speech, they're gonna be waiting for keywords to be said, and those keywords may happen a couple of minutes after the start of the speech, and they may not even happen. So it not necessarily is going to do anything right away.
Just how perfect that stop loss is, just marking the support and the resistance of that move. It's just like somebody
like
asked how you do a horizontal level for support and resistance.
Yeah.
I've just shown you how to do that with a stop
Yeah.
loss.
Beautiful. You used the wrong tool. You should have used the horizontal line, not the stop loss.
Yeah, I've got to actually jump off because I've got to give Michael from TTP this camera, because everybody likes using this camera because it's the only camera.
Yeah, we're gonna wrap up, guys.
I'm gonna jump off, but everybody can mark this and just see if I was right or if I get stopped out. So my stop out level is 83321, and the TP is 83623. So I'll see you guys tomorrow, and we'll see what happens.
Yeah, take care, man.
Sweet.
And everyone, thanks for joining here today, and we will see you all tomorrow for the next live stream. Thank you for joining, everyone, and hope to see you all in the live stream tomorrow.
Bye, guys. See you tomorrow.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.